I've helped hundreds of millionaires manage their money, and there's one weird thing that I've learned about this process. That's 90% of them are a little bit scared of investing. They've often illogical fears that make them anxious about messing with their money. And in the long run, this anxiety can have a devastating impact upon their finances. So in this video today, I'm going to explain how I've helped them overcome some of these fears and to really start building intergenerational wealth. So number one, the wealthy have more to potentially lose. And the first fear is due to something that we're all born with. Evolution has wired us with it. But it's often exaggerated when you're a millionaire. And that's because in the past, our ancestors have lived day by day. They woke up, they hunted for food, they ate the food, and they tried to avoid getting eaten by wild animals in the process. There were no fridges. There weren't promotions at work, and there weren't complex financial products. People over the millennia have just had to focus on surviving. And so over time, our brains learned to focus much more on the immediate now and survival than rewards in the future. And this has naturally made us very risk-averse creatures because our survival depended on it. Studies show that we feel the pain of losing money twice as much as any pleasure that we feel from gaining money. In other words, it's very difficult for people to put aside their anxieties about losing money for the delayed gratification of getting a return on our investments 10, 20, 30 years down the line. And this is often amplified for the wealthy millionaires because quite simply they've got more to lose. And number two, they've already made it and fear change. I also meet a lot of millionaires who proudly tell me that they've never invested a penny. These individuals tend to run successful businesses or work at big corporate firms, so they earn a lot of money right now. However, they often make the mistake of assuming they're set for a great retirement because they have this big 6-7 figure salary right now. They think they've already made it and that their job or their business will take care of them forever, but they make no effort to grow what they already have. It's extremely hard for these individuals to calculate the opportunity cost of the extra wealth that could have been but isn't because they lack a plan. This is exactly why I personally like to map everything out, to visualize the often huge gap between the existing status quo and the life that could have been but isn't going to be because they didn't take action. In many cases, these individuals have a very high cost of living. And the reason that underpins this mistake is the fear of change and a lack of awareness. You see, having money in your bank account can make you feel safe, but once you invest your cash, you won't have it at your fingertips anymore. And this feeling can be worse for rich people because they're used to having the comfort blanket and seeing lots of zeros in their bank account, and they're scared to lose that false security blanket. You see, cash at bank might feel safe in the short term, but it's actually the most dangerous to your future self in the long term because your future purchasing power is being eroded by inflation. This is why it's so important to set up an emergency fund and manage your finances properly with a fixed income war chest to get you through periods of volatility so that you can happily and confidently invest the right amount of money while still having cash in the bank at your fingertips. But even if somebody isn't scared of investing itself, fear or greed can make us all do silly things. And over the course of my career, I've worked with lots of people who've come looking for advice after a series of bad, suboptimal investments. Maybe they jumped into property funds before the credit crunch, overexposed themselves to Asian stocks, went all in on crypto, AI funds or solar park funds, because they heard that all of these things were going to be the next big thing. But the reality is that peer-reviewed academic research and prize-winning economists show that people have much more success with globally diversified long-term strategies, and the chance of finding that new hot stock, yet time and time again people get caught inside that hype. And why? Well, it all comes down to one thing: FOMO. We don't want to miss out on that big opportunity. And I see this with high-earning clients a lot. They're often so obsessed with what their colleagues or friends might have achieved. They follow their advice from their brother-in-law down the pub. They try to fast-track their wealth. But good investing is a decades-long game. It might take many, many months or years to get the type of results that you want to get. You just need to keep your head down, follow your plan, and you'll be there at your own pace. And number 4 is knowledge, or potentially a lack of it. Because while some people become addicted to their trading account, terrified they're going to miss out, other people avoid it altogether. Lots of people potentially dip a toe in the water at some point in their lives, but the more they start researching and the more knowledge they start to learn, the more they become overwhelmed and ultimately give up, because there's so many conflicting sources and opinions. And I can completely understand why this happens. People hold Nobel Prizes in investing and spend their entire lifetimes studying it. So it can certainly feel like there's an awful lot of information out there. And this fear or anxiety over how much information there is ultimately turns a lot of potential investors off, particularly when there are millions of dollars at stake and a potential lack of knowledge can cause a large loss. And number 5 is probably the most frustrating, but there is absolutely nothing you can do about it. Quite simply, the stock market is unpredictable. And if you look at the results over a day or a month, it can fluctuate like crazy. So for millionaires who have a lot invested in the market, the risk can seem much greater, because in the space of just a week, you can literally lose thousands of pounds. However, if you invest money and take it back out at the very first sign of a wobble, you'll never get anywhere. As a good investor, you need to take a step back and look at the stock market over a long enough time horizon. As you see, the stock market never progresses in a straight line. It just goes up and down with the seasons. So you need to be prepared to let it do its thing. You'll never be able to time it or predict its cycles. You just have to trust that if you leave your money put, it will grow. Short-term volatility is a price that we all have to pay in order to enjoy really great long-term returns. It's a feature of great investing, not a bug within the system. Decades of academic evidence tell us that this has and always will be the case, and time, patience, and discipline are the ingredients of a great investment experience. And what is even more compelling is that academic research shows the cost of not investing is far greater than any loss you could make from investing wisely. So how can you overcome these fears and get your money to work for you? Well, the key is education. You need to shift your mindset, and the only way to do that is positive reinforcement. So try this. Every day, remind yourself of the facts. Number 1, investing wisely is nothing like speculating or gambling. It's been very thoroughly researched and is scientifically proven to work over the long term, so follow this evidence. Number 2, the sooner you start investing, the better. The power of compound growth is much stronger over the long term. It doesn't matter if you invest 20k at the age of 50, someone who's been investing little smaller amounts steadily over the longer period of time will always be better off than you. So don't wait around and start today. And number 3, always have a backup plan. Run frequent what-if scenarios on your cash flow plan and a few practice drills in your mind to convince yourself that whatever happens, you're going to be okay. That way you'll be more confident to always wisely invest your money. And if you do these things over time, your mindset will eventually shift and you'll train yourself to be less afraid and fearful of investing, to have less of a cortisol reaction or stress response when you see periods of volatility. However, there are some other big mistakes that high earners make that they end up paying for heavily. So, even if you are investing, these 5 mistakes will limit you from building long-term wealth. So watch this next video to find out exactly what they are.